And that markets evolve, and we never want to go back. We never want to go back to a market structure that we had in 1990 or 2005. But there were attributes of that market structure that serve small to mid-sized companies extremely well that have not been replicated in this new world that we are in today. And we do find that to be frustrating. And that now has been replaced by machines. I mean, the amount of person-to-person contact within firms and from firm to firm has changed dramatically. And we still believe that, listen, technology is great, and it's wonderful that we can send a newsletter to 35,000 people. That's great. But don't kid yourself. There is more information and more value in a conversation than there is in an email.
Welcome to Life on Planet Earth with John Aidan Byrne.
That was Jim Towes, the president and CEO of the large grassroots Wall Street trade organization known as the Securities Traders Association. It's for professional traders and other professionals in financial services. And he's my guest coming up.
A voyage of discovery in an uncommon age of unparalleled scientific, economic, political, and social upheaval, Life on Planet Earth searches for the unvarnished truth, answers, solutions, and above all, hope for our existential crisis.
Sure, look, it's grand to have you back. I'm your host, John Aidan Byrne. Our guest, Jim Towes, President and CEO of the Securities Traders Association, based in New York, will dig a bit deeper on the implications of the recent riots in DC, what it means for Wall Street, and he even weighs in on the US presidential elections.
Even today, millions of Americans woke up today and they still feel that there was a lack of integrity in the election process that occurred in November. Mm-hmm. And this has to be like the number one thing that this new administration has to respond to, is that they need to restore confidence and integrity in the election process. That has to be, every state obviously needs to go out and do what Florida did in 2020. So I do think that the biggest question, because it will spill into the markets at some point, is...
To protect her home and family in a disaster, Karen was willing to wade through water, mud, and insurance paperwork.
Yeah, I can do this.
You go, Karen! By simply understanding and updating what her insurance covers and doesn't cover now, she'll be better prepared no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
And before we get to Jim Towes, we're going to start with the opening bell on the floor of the New York Stock Exchange. This is also our first podcast created especially for our YouTube channel with our new audio-visual component. Go to Life on Planet Earth, and you can keep listening to us on all your other favorite podcast channels: Spotify, Apple, Google, Breaker, and more. My guest is Jim Towes, President and CEO of the Securities Traders Association, a very important grassroots Wall Street trade organization with headquarters in New York and a vital presence in Washington, D.C. It has 24 affiliates across the United States, and it has members on America's trading desks and financial houses. Jim has over 30 years experience on Wall Street, including 18 years as a managing director at Bank of America Merrill Lynch. We will catch up with Jim in a wee moment. I'm your host, John Aidan Byrne. I'm delighted to have you here, Jim. What's going on at the STA these days?
Oh, listen, well, first of all, thanks for having us on. It's really great to reconnect in this way, John, and it's been a while, and it's nice, good to see you. Happy New Year to you and all your listeners that are joining us today. So, yeah, I mean, listen, it's been a very active time for STA. We kind of sit in the middle. We have, on the one hand, we have all our financial services members, people who are in the financial services industry, just on one side, and then the other side, we do a lot of work in DC, like you kind of talked about, right? So we kind of see ourselves in the middle of two worlds, stuff that goes on in Washington with congressional members and regulators like the SEC, and then the business world, as far as at broker dealers, asset managers, and exchanges. So, our office remains in New York, but we do spend, a lot of time in DC.
So tell us about the history of the STA, its membership, and how did you get into the business?
Right. So like you talked about, we've been around for a long time, right? We were formed at a very pivotal time in our nation's history. I mean, it was during the FDR, during the New Deal, right? And obviously at that time we were coming out of the Depression. The Securities Act of 1934 was being written by Congress. That act created the Securities and Exchange Commission, the SEC, and we as an association, as an industry group, formed as an entity to engage the SEC on it. So our history goes back to as far back as 1934, when our first meeting was held in Chicago. Yeah,
I mean, full disclosure, I've known you for many years from my days as editor at Traders Magazine, a venerable publication we all love and still read. And that was in the days when Ken Heath, the wonderful and noble Ken Heath, was publisher. And we used to, of course, cover all the trade conferences. And back then, it was very much oriented, Traders Magazine and the STA, towards the stock trading side, and then options became a bigger part of it. And that's sort of your biggest constituency today. So tell us about the sort of what happens at the STA and the networking that goes on and the opportunities that you provide your very large membership, and why somebody should be a member of the STA.
Right. Yeah. So, I mean, listen, I think what is a trade association, right? A trade association kind of does two things. One, they educate their members, and then two, they represent their members' interests with, various regulators and legislators. Those are kind of the two core functions. Where we're different than most associations is that our members are individuals, like you kind of touched upon. Most associations that are out there, some of the very large ones, their clients are the firms. Their client is a Morgan Stanley, is a Merrill Lynch, or is at the firm level. We're more at the individual level, which means a lot of the content that we're putting out here is around career development. It's around helping people with their careers through educating them on industry trends, and also, like you talked about, like you touched on, providing networking opportunities where they can meet other people within the industry and then advance their career on it. That's obviously has changed. That really means something different today than it did mean back in 1990 and 2000, when there were a lot of really the only way to kind of network was to do it in person, physically. That still occurs with us. We still do a significant amount of events every year. Our largest event down in DC, that we have attracted 750 people in 2019. Obviously, 2020 we had to take it onto a virtual basis. But moving that that physical location where network is occurring to a virtual aspect, it has pluses and minuses to it. We've been able to reach a much wider audience. This year when we had the conference, we had around 1,600 people, registered for the event. But they obviously, it wasn't the same deep quality of networking that occurs when people are in a room together, looking at each other's faces, shaking hands, and having a conversation on it. So, the world has changed, right? The world has changed, and we've had to adapt, just like all other firms have had to adapt on how they engage with their members, how they go about it, and the means and what they're putting out and how they're doing it.
Of course, the world of trading itself has changed. You can remember when there were a lot more human traders on the floor of the New York Stock Exchange, on all the big NASDAQ trading desks. We moved from a semi-automated system to almost, a high-speed trading system on the floor. There's much less of a human trading presence on the floor of the New York Stock Exchange and on all the trading rooms at Merrill Lynch, Goldman Sachs, and so on. That's been a phenomenal evolution.
Yeah, it has. Listen, technology has changed every industry in the world, right? Travel, journalism, medicine, everything has had an impact, because of technology. Now, I think the effects of technology, when we look at it, there have been enormous efficiencies along with enormous amounts of disruption. So I think in the financial services industry, I think where the efficiencies, where you can see them most obviously, is just the ability for individual investors to connect to the marketplace, receive education, and then have a platform to trade on it. So, just think about I know we hear a lot about the Robinhood effect, but this didn't exist, 20 years ago. The ability for someone in their living room to connect directly into the marketplace with the means of, getting onto a platform, receiving the education so they have the confidence to trade, and then they have a very efficient way to engage into the marketplace directly. They're getting prices that are timely and accurate, and their ability to just click a button and buy or sell an option or a stock or an ETF is inexpensive. Obviously, as you know, there's been commission-free trading on some of these platforms now. So the technology that has come into our marketplace has enabled people to connect, be educated, and trade very efficiently. On the negative side of that, obviously, there has been an enormous amount of disruption. To your point, there are, what used to be done by many is being done by few. There has been an enormous amount of consolidation that has occurred in our marketplace. This has led to, to fewer and much larger players. This has led to, things being done faster and more efficient by less people. And, it has been very disruptive, where we have seen people of a certain generation just leave the industry altogether, which is fine. They move on. People work in our industry, we always feel have been very resilient. We tend to be, fairly intelligent, very hard work ethics, and our ability to adjust and to make decisions to leave when the market is telling us that there is no longer a value for our services. We tend to leave and go into other areas. And I think that has been a remarkable story for the industry, or its ability for individuals to take a skill set and then move elsewhere into another industry.
Well, the SEC introduced a lot of these changes with consultation with industry professionals and studies and so on. So I'm thinking of Reg NMS, the move to decimal trading from a fractional system. That was also, historic. But it upended the market and the culture of trading, as you might have remembered it, and I certainly remember covering it. It was a very colorful period. We get sort of nostalgic, Jim, in our old age here, even though we're young fellows. But, you have all those conference gatherings, which you still have. They're very successful. But I seem to remember on NASDAQ market making, there was a lot of colorful characters, and they were old school. I'm thinking of, do you remember a gentleman called Lee Belleri, the late Lee Belleri? What a gentleman. And I hope I can mention some names here, because I think it's good to bring out history. Aldo Parsicepi, quite a genius, as far as market making went. And he was a staunch advocate of the traditional market making system. Now, I suppose some people would say, well, you know, vested interests, but I often listen carefully to Aldo, and his argument in my mind made perfect sense in terms of other kinds of efficiencies that we actually seem to have lost as we've tried to level the playing field for the little guy.
Yeah, I mean, yeah, there were a lot of colorful personalities, you know, back then. I think there's probably two things that kind of come to mind when you kind of touched on that. You know, first off, a lot of the concepts are still exist today. They just exist on an electronic platform. People want to get as close to the execution as possible. Some of these broad concepts that, around, you talk about high frequency trading, the things that they are doing it. They're just doing it on an electronic platform that is a lot faster than what the human being used to do. But the concepts were still the same on it. The part that I do think that the commission does need to look at it, and they do, they have touched on this, and I know that Chairman Clayton really has tried to, drive conversation around this, is that, we have this one size fits all type market structure, and the market structure that we have today fits well for large companies that have large floats that trade electronically and have a lot of interest in it. But the value of the market maker who's committing capital, it still exists today in those companies. It just looks differently. It's an electronic market making through the Citadels and the Virtus, and they are providing enormous service and always being willing to stand and make a two-sided market on it. But there was a capital commitment that firms upstairs at Bank of America and Morgan Stanley, a lot of those people you just talked about, their willingness to commit capital upstairs, that's kind of gone away for the smaller and mid-sized companies, and that's one area where I think we get frustrated. It's like, yes, we understand that markets evolve, and we never want to go back. We never want to go back to a market structure that we had in 1990 or 2005. But there were attributes of that market structure that serve small to mid-sized companies extremely well that have not been replicated in this new world that we are in today. And we do find that to be frustrating, and really where the shortcomings that we feel is that the incentives to commit capital, in these small to mid-sized companies has not been replicated that used to exist back when Aldo and Buzzy Gould, another legend, right? I mean, he's still in the business, by the way. I mean, Herzog, Heine, and Gould, he's still in the business, but the day that when they were around.
Yeah, they not only did they bring color and vitality to the industry and humanized it, but they also had a depth of knowledge that they could share with their clients. And I'm not sure if that can be properly replicated in an algorithmic driven environment. Yeah.
I mean, listen, we're still very much an apprentice industry. Right. I mean, how did I get trained? How did most people get trained? They put us in a seat and they sat us next to someone who was more experienced, and we learned, and then we passed that knowledge on, and we passed the knowledge on to clients who were doing the same thing, and that now has been replaced by machines. I mean, the amount of person-to-person contact within firms and from firm to firm has changed dramatically, and we still believe that, listen, technology is great, and it's wonderful that we can send a newsletter to 35,000 people. That's great. But don't kid yourself. There is more information and more value in a conversation than there is in an email. There is more information and more value in a conversation person to person than there is on over a phone. So we can never forget that.
Yeah, so there are nuances in conversations that may be missing in a pro forma newsletter or a memo or whatever. But that sort of brings up a good point to technology. We should all be pro technology once it's applied. We're not Luddites or whatever. We don't want to regress. But there were some very brilliant people in trading just a generation ago. Many of them are still on trading floor, and they had a diverse and interesting backgrounds. Some of them had, advanced college degrees. Others maybe finished high school. Some maybe never went to high school, but they got in by sheer ability and so on. What does it take to become a trader today, Jim? Do you need to have a PhD in rocket science?
It doesn't hurt. It doesn't hurt. I mean, yeah, listen, I'll tell you what, my story of getting into it is probably does not happen today.
Yeah, I want to hear this story because I know it, but it's brilliant.
Yeah, so listen, I mean, I'm the youngest of 7. My father was a New York City police captain. I graduated Fordham University in 1985. I took my degree in economics and I went down to Pier 17 where I took a bartending job as I was waiting to be called for the police department, waiting for my number to be called. My number was eventually called, but it was called for the transit department, so I didn't really want to ride subways for the rest of my life. And looking, Pier 17, as you know, John, back then was the place where all the Wall Street folks hung out. So I just started handing my resume out from behind the bar, and eventually I found someone to take a shot on me. So I worked at Oppenheimer for 7 years, trading over-the-counter securities. They were NASDAQ securities back then. From there, I went to Merrill Lynch, where I worked for 18 years. And now I've been at STA now for 10. So I consider myself fortunate that I guess that makes me around 105. But I just consider myself really fortunate to have walked through the doors of Merrill Lynch when I did during that time period. It was a wonderful firm. I miss it, but I also realize that doesn't exist anymore. And it's just great that I think very fortunate that I've only worked in 3 places in around a 35-year career on Wall Street. But that's where I got to start. I don't know how, today, what's the skill set? I mean, it is, I'll say 2 things about it. One is, obviously you have to have this math background. You do joke around it being, a rocket scientist, but, Wall Street is still able to attract the brightest minds. It's a well-resourced industry. They can pay a lot of money. People want to, so they have the ability to attract the brightest minds that we do have out there. If someone was getting into the industry today, I would just say, listen, you have to understand that you have to find another interest, as far as you just don't go into Wall Street and work on Wall Street. You have to kind of bring another interest in with you. So, if you have an interest on energy, I think what we're seeing now on Wall Street, with the different trend here, is that if I was the energy trader at Merrill Lynch, the only job that I really would have been the energy trader over at Citigroup or over at Morgan Stanley. What we're seeing now, I think, is this: people are, if my expertise is in energy, I am working at an investment bank. I'm either trading it, or I'm a research analyst, or I'm a salesman in the space. But my next job, though, could be at an asset manager. It could be at a private equity firm. It could be even at Exxon. And so we're seeing that type of movement in the job market, where it's not a typical Wall Street person. It is somebody who has another skill set, another interest, that is kind of either moving through Wall Street into their corporate side of the industry, or into the asset management side. They're kind of moving around in a different direction than we've seen in the past.
Jim, did you work, was it in the Blarney Stone that you worked before you got your job? You see, I'm raising this up to you and to your legacy and the NYPD. It
was Bergen's.
Okay.
Bergen's. Yeah, right down. We're right next to McMenamins, right above Flutie.
Oh, I know that. I think McMenamins is still there.
I got to say, listen, that place rocked back then. Yeah. I don't know, the South Street Seaport. I remember it used to be so crowded there, John. First off, I did continue to bartend the first. I was working on Wall Street probably for I think 2 years, and I was still bartending there, because the pay back then on Wall Street for an entry-level person wasn't that good. I'd be people like, oh, you're still bartending for extra cash in your pocket? Like, no, I'm bartending to pay for my rent, because I'm only getting paid such a small amount here.
Right.
But the crowds used to be so big, I would have to literally. There was this large area of cobblestones that this open space cobblestone area that was, like an avenue block in length. And I would have to walk a block out of the way because you could not get through the crowd. It was such a popular place back then. Of course, now in the world of COVID, I don't know, you had to, I don't know, probably doesn't happen anymore.
Well, that's a whole story. A great friend of mine, Hugh O'Loney of O'Loney's Times Square Bar and Pub, I don't know if you've ever visited, it's gone. Hugh had to hand in his lease. He was paying $90,000 a month, right, in the middle of COVID, and he said, this is not going to work. So they've basically told the, restaurateurs and small businesses, you have to do takeout and so on. And it's been a total miserable disaster. But that's getting a little political. I'm wondering how traders are coping during COVID. Do most of them work remotely, or is there social distancing on the floors, New York Stock Exchange? I guess to go around with their masks.
I mean, listen, so let's just go back in time a little bit, back to March when the COVID was really starting to pick up momentum. I think, the strategy that firms were taking at that time were, all right, let's try to get a third of our employees to our disaster recovery site, because every firm has a disaster recovery site. Let's get a third of them home, and let's keep a third in the office. And that should be enough to get us through, this pandemic. That quickly turned to, we got to get everybody home, right? So, and of course, this huge migration of everyone working from home, these things never happen like in August when markets are slow, right? This happened during extreme volatility, at the peak of volatility and disruption that was going on in the marketplace. The fact that our markets opened at 9:30 and closed at 4 o'clock and people were able to get trades done is an unbelievable testament for all the investing and that firms have done in technology to run their systems. It is also a testament to the work that our regulators have done as far as regulation around Reg SCI, which is making sure that things do work. It is really, it's just incredible that what happened when it happened, and that we did not have any major outages during that time period. So to answer your question, yes, people are working from home. They are working from home. They are trying to, some people are going back into work, but I think the work from home environment is, every firm is going to have to offer that to employees. I think that is definitely here to stay. But I think as we kind of go into this, will now be a full year of it, I think people are starting to kind of get these, I want to get back in the office. I want to get back in. There's that camaraderie, being around people, the human element, being able to be strategic is really important, that people are in the same space, kind of, in each other's presence doing it.
I asked what kind of family she wanted. She said, a family like yours.
Learn more about adopting a teen at adoptuskids.org. You can't imagine the reward. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
My guest is Jim Toles, President and CEO of the Security Traders Association. And I can't stress enough, it's a very important trade organization on Wall Street and in America during these difficult and strange times of COVID-19 and economic uncertainty. I'm your host, John Aidan Byrne. Humans are social animals, and socializing is a good thing. And studies will show that productivity ultimately drops off where there's not a lot of interaction. So you just can't do everything remote. So
yeah, you're right. I mean, there's just one more point on this. You're right. Listen, here's the deal. When everybody was home, then everyone had an equal seat at the table, right? Because everyone was remote. But now we're kind of in this period where, okay, if you have a meeting in your office in New York City, and now there are maybe 5 or 10 people in the room, and you have 25 who are remote, that's a different dynamic. And I think firms are really trying to find a way to address that. Like, how do we, that we can't have those people who are calling in remotely feel like they're being marginalized, that they feel like they're not being heard, or that we're not getting their input because they feel like they are disconnected. So we're kind of in a weird period right now where firms are really trying to deal with this hybrid. We have some at home and we got some in the office.
So there has to be some kind of consistency. We're also have had a phenomenal run on the stock market. I mean, we've hit a new record. I don't know if anybody would have seen that coming, but I'm going to assume you will attribute some of that or a lot of it to the stimulus coming from the Fed, or is there something else going on here, Jim?
Well, so you can't, I mean, first off, yeah, I am shocked at where the market is. All right. You are correct. Like in the beginning, there was an enormous amount of stimulus that was put into this, into the markets during the early days of the pandemic. I also think that just with, when you think about the events, that these events have played well for the larger companies. The ones that have the technology and did not, that did not have to be shut down during this. So I think that some of these larger companies have benefited, at the detriment to small mom and pop companies. Yeah. And at some point that's going to come to roost. Yeah. On this. And the other part too is like, listen, some of these companies, like, the ones that are kind of driving these are the ones that are, they kind of, they had the technology, and the ones that are coming to the marketplace, and this just kind of took like what they thought was going to be a 2 or 3 year growth period, and because everyone had to go work from home, it just kind of shortened the work period down to a couple of months for them to kind of grow this big. So, but bottom line, yeah, I am surprised that like most, that the market just keeps going up. I get nervous about it. We've seen enough of this where people kind of get a little, complacent, and they just think it's going to go up every day. And at some point, listen, President Biden's going to be every president, every new administration gets a test. Right, and we're going to see that. Yeah, and he will get a test. He will get a test, and we'll see what happens.
Yeah, I mean, the whole pandemic economy has been nothing like we've seen in history. You can't compare it to the Great Depression, nothing. I mean, the whole market interventions and the monies shoring up the economy, winners, losers. Now, we're all free enterprise people. Our show is a free enterprise, pro-business, but you make a good point. Some of the very big business have done exceedingly well, and God bless them, and some of the billionaires have done well, God bless them, but a lot of small businesses have hurt and gone. Mom and pops, 3, 4, 10 people, 100 people, they're gone. It's a very strange, uneven recovery.
Yeah. Yeah. I mean, yeah. I mean, this isn't, yeah. I mean, I would just say yes to it. That's it. I'll say that yes. I mean, I think there's some, in some ways, I don't like to use that term as a zero-sum game, but in some ways, some of these companies that have benefit, they have benefit in areas where it is a zero-sum game.
Yeah.
Okay. I mean, I'm only buying, there's only a certain amount of gallons of milk that get purchased every month by our nation. And if all of a sudden one company was delivering 10% and now delivering 20%, someone that 10% wasn't new demand for milk all of a sudden. That was taken from somebody else.
Right. So where do you see this ending, the pandemic economy? Is it going to end well? Or do you have any fear that we could have a major bust if the Fed withdraws stimulus? That's one of the theories out there.
Yeah. Well, listen, I think that, I think, where does this kind of lead us to? I mean, I think, listen, we need, there are still political uncertainties that exist. And I know that we're taping this, less than 24 hours after the mob did what they did down in DC, which was such a sad day. But I do, that was a very sad day, and we can talk about it more if you like. But bottom line is that even today, millions of Americans woke up today, and they still feel that there was a lack of integrity in the election process that occurred in November.
Mm-hmm.
And this has to be like the number one thing that this new administration has to respond to, is that they need to restore confidence and integrity in the election process. That has to be, every state obviously needs to go out and do what Florida did in 2020. So I do think that the biggest question, because it will spill into the markets at some point, is that how our leaders respond. I mean, the people who are now in power, how are they going to respond to this? The 45 million people. I don't know if 45 million people would vote for Trump today after what happened yesterday, but there are still millions of people who on both sides, Democrats and Republicans, who just have lost confidence in the integrity of the election process. And that is such a, the power of the vote. I mean, our democracy is built on that, and we need to restore that.
So you would favor some kind of an independent commission to look at the whole process and bring in lots of experts, do a lot of studies. It's so complicated. It's interesting to listen to Eric Trump and Donald Trump and people who have been critical of the most recent election. Statistically, I mean, they make a pretty good point that it's hard to understand how Biden, not taking a side here, won the election.
Yeah. Listen, this is really done at the, we don't want Congress obviously picking our president. I do hope that I think there is concerns that, maybe leaders at the national level, how are they going to respond to the events of yesterday? Are they going to use it as an opportunity to take away more civil liberties, or are they going to use it, or are they going to see it as something as an aha type moment where they need to, play a leadership role on bringing integrity to the election process at the state level? Right? We obviously, this is very much of a state issue, how elections are run. It doesn't mean that the federal government doesn't have some type of a role in providing information or offering guidance, or they do have a limited role intentionally on how elections are done, but they do need to play a leadership role on making sure that we never have this happen again.
Yeah. So because the integrity of the vote, it spills over into the economy, and it's something that Wall Street watches. It's something that you, as leader of the STA, would be take close interest in, and all your members would. And I guess at the end of the day, we need unity, and we certainly need peace. We don't need violence. There's no room for violence and people smashing windows on any side. I know your group lobbies in Washington. You're very close relationships with lawmakers there. Everybody was okay, I presume, yesterday?
Yeah, I'm glad you brought that up, by the way, because that yesterday, as we watched, those images on TV, I mean, I don't know. First off, if any of your listeners ever go to Washington, D.C., I always tell people, when you go to D.C., don't go to the museums.
Right.
Go walk. You're able to walk in to the buildings where congressional members and senators meet. You're able to just walk in. This isn't like it is. When you think about how hard it is to get into an office building in New York City, where you have to have an appointment, and then you don't get past that guard in the lobby unless your name's on the list, and you show an ID, right? We have the ability as U.S. citizens to walk in and out of these buildings on a regular basis, right? I mean, you go through a metal detector, right? I would really recommend people that they go in those halls. When you walk the halls of these House office buildings, it is like walking. It's a lot like a temple or a church, and it's like sacred.
Mm.
And to see those people walking the halls the way that they did yesterday was a very it just really hit like a nerve, like you felt violated, and desecrated the insides of our government. And it was a very personal, I know I speak on behalf of, we bring our members down to DC on a regular basis. And I know that they feel the same way, that when you bring someone into one of these buildings, they get inspired when they walk in. And when you sit them down with their congressional member and they have the ability to talk to their representative, when they leave, they are just so inspired and they feel good about having made the trip. And that to me was just the saddest part, to see something that you hold as sacred to be treated in such a way that it was treated yesterday. It was very upsetting.
Yeah, well, I hope we never see anything like it again. And it makes you wonder, because your dad was in law enforcement. I'm wondering what he would have said if they had looked at the security around the Capitol. To me, it was wanting. I mean, where were the barriers? As somebody said, why was there no snipers up on the roof? Or was there no? Why could the mob not be controlled?
Something. So that has to be found out as well. I mean, listen. I heard the commissioner speak. They were, the DC, they were caught off guard. I mean, all right, I'll give you some benefit of a doubt on that, because obviously Trump has held a lot of rallies over the past 4 years. 25, 30,000 people is not, large, and factually they have never been violent, right? We have not seen violent Trump. So maybe there's no historical perspective on here. At the end of the day, though, that police department has 1,800 cops in the metro. I didn't see 1,800 cops around that building.
No.
All right. Then on top of that, they have the ability to, then you have there are different, you have the police, the police that guard inside the buildings, but then that metro police, 1,800. I didn't see that many around there. And you're right, man. I'm sorry. I don't understand how they appeared on some of the videos that we've seen, their ability to get into that building completely unfettered. I don't understand it.
Yeah. Well, we gotta pray for peace in this country. It's in a strange moment in history. So was Trump good for the market? He clearly was. I mean, he's leaving office with the Dow record high. What did Joe Biden bring us?
Well, we'll have to see, right? I mean, listen, he came, listen, at the time when Trump came in, we were coming out of the one thing that Washington and a lot of industries, not just Washington, we don't, we call it we don't do dimmer switches well. It's either something is either on or it's off, or maybe it's the pendulum, if you want to use that as the analogy, right? Mm-hmm. So if you think about, the financial crisis of 2008, and then the years of, Dodd-Frank and more regulation and regulation upon regulation. And there were times we were going down to DC and we were, they were taking parking lots and putting in these mobile structures, because as the government, it was growing so big, they were going outside the office space that was available down there. Right. So he comes in and yes, he does away with the regulation on it. And that obviously the market responded well to that. We like certainty. I'll tell you one thing. That's one thing that the market likes. They like certainty, and hopefully Biden can bring that. You can have regulation, but you just can't get into a period where it's like if the market feels that it's just endless and it's just going to keep going and going like we were getting. Markets don't respond well to that. We like certainty. We like to kind of know that we're going to make a decision today based on a certain set of facts, and that those facts are not going to change a year or two from now.
Right.
So hopefully you can bring that.
Yeah. So for your members, speaking to them directly, what's the hottest item on your agenda?
We're concerned around a financial transaction tax. I know this is probably, we always talk about this, but we do see, obviously there are a lot of states and the government, that are dealing with tremendous deficits as attributed to COVID, and they're going to look to find a new revenue stream to fill that, to offset those debts, that they have shortfalls in their budgets. And we are concerned that they will put in a new type of financial transaction tax, and that would be very unfortunate for our industry and investors.
And the political winds would seem to be shifting in that direction, especially after what happened in Georgia election in Georgia yesterday with the outcome of that election. So you're going to watch that very closely. So it would seem that there would be a tendency among state regulators and certain politicians to tax Wall Street more heavily.
Yes, yes, and to do it in such a way that what they don't realize, no matter how many times we kind of explain it to them, is that this tax ends up being paid by the investor.
Right. Well, we're just going to wrap up here with a few quick ones, Jim. Is this a good time for somebody to have a career on Wall Street? Would you advise them to go in any particular direction?
Oh, yeah. I mean, listen, 35 years in the industry, I love this industry. I mean, it's one of the few industries, John, where, as you know, where something, you could go to work and something happens in the world and you feel it like at your job. It impacts something at your job. And I think that there is an enormous connectivity between working on a Wall Street firm and the world in general around. You're more in touch with events that happen on it. So I'm always encouraging people to enter the industry. I just want them to enter it though with eyes a little bit wide open. That you need to kind of come in here and realize that a couple of things. One is that it's a great industry, but it's very uncertain at times and disruptive, and you want to make sure you're saving all your bonus checks in the beginning, and because odds are you're going to be facing being let go at some point in your career, and you're going to have to find another job.
Yeah, or we might be looking for jobs in McManamans again, which would be okay. Yeah, the tips are good there.
I would love to go back. I'll tell you, that would not be. I would love to end my career the way I started it.
Yeah, well, we could talk about that. Life in a pub is theatre, really, if you think about it. You can have a lot. In Ireland, Jim, you visited Ireland because that's your heritage. They have a lot of crack in these pubs. I don't mean crack as in bad stuff.
Listen, my oldest daughter married a boy from Waterford.
Oh my God! Okay, well, listen. Here you go.
So there we go. So.
Jim, the other thing, as some of our listeners are going to be asking, they're listening to Jim Toes, President and CEO of the Security Traders Association. Is everybody on Wall Street a multimillionaire?
No. That is another thing that is such a, there's a lot of hardworking people on Wall Street that wake up in the morning and middle of back office and, no one, we're not all, I don't want to start mentioning names and stuff here, but we're not. They're not.
Yeah, in other words, there are people who lose their job, and many have gone through hard times. So it's not sunshine and roses for everyone.
No, I mean, listen, I got let go from Merrill Lynch twice in my career. How crazy is that? And I live in a neighborhood that has a lot of doctors and lawyers, and they don't accountants, they don't understand that part, like how we. That's another thing. You got to have the stomach for it. But no, everyone on Wall Street is not Jamie Dimon.
Yeah. And Jamie does a good job.
He does a very good job. Yeah.
Yeah, no, it seems like I'd never personally met him, but he's got publicly he's a nice demeanor. He's great analytical mind. Mm-hmm. He's a very hard worker. And he had a bout of health issues, and he's at the helm.
Yeah.
Right? It's reassuring when you see a strong person like that to the forefront. Mm-hmm. So Jim, if somebody wants to join the STA, how can they do it? Go on your website, reach out to your office.
Yeah, we're out there, securitytraders.org. The good thing about having a last name like Toes is that I'm pretty easy to find on social media. So
yeah, right. yeah. Well, Jim, it's always a pleasure talking to you, Jim. Have a happy new year, and we'll talk again.
John, and I hope next time we talk, we're talking over a pint in person. All right.
You've been listening to Life on Planet Earth with John Aidan Byrne. To reach the host or learn about advertising or sponsorship opportunities, call 973-664-9460 in the U.S. or email burndesk@gmail.com. That's 973-664-9460 in the U.S. or email burndesk@gmail.com. 973-664-9460 in the U.S. or email burndesk@gmail.com.